Wish you happy new year, and formally we'll start our new session. Yesterday, I got a message from Lanka Business Online LBO. It states like this: ASPI records 10.5% growth in 2020, highest annual increase since 2014. Total turnover rupees 397 billion, highest since 2011. S&P SL20 declined by 10.1% in 2020. Okay, so we are going to talk about share market today. After starting our session, we talked about financial intermediaries, then we talked about venture capital, insurance. Now we are moving into another very interesting area, that is non-banking, that is share market. Okay, now can anyone tell me who is this person? I'm showing you a picture. Can anyone tell me who is this person? Very good. Warren Buffett. He is well known for his value investments, and he has been the world's richest man many times. What is his real business? Most of the rich people, they own a business. Warren Buffett, what is he doing? What is his business? Yeah, to be the richest man in the world many times, what is his source of income? Yeah, can anyone tell me what has made him so rich? Hope all of you can hear me. Right, so I'm asking, in order to make him the richest man, what is he doing? He is investing in stocks. So most of the rich people, they invest in stocks. Under financial intermediaries, we talked about two types of people: those who are in deficits, financial deficits, those who need money, and the other people who have excess money. The excess money can invest. Those who have excess money, surplus units, they prefer to invest. Where do they invest? Okay, tell me different options. If you have excess money, where are you going to dump them? So you call them investments. What are your investments? What are the areas you can invest? Tell me some examples. You have, let's say, 60 million in your hand. What are you going to do with that excess money? Can you hear me?
Yes, sir.
Okay, right, thanks. Now, if you have excess money, what are you going to do with that? In the chat box, tell me some alternatives. Very good. FD, right, fixed deposits. So you have excess money, investments. Tell me, okay, I need further clarification on investment. Investment is one blanket word covering so many products. I want to look at these products. FD is one such. What are the other alternatives? You can invest in trusts. Yes, there are unit trusts. You can invest on shares. Yes, unit trusts. I'll do a separate session on that. Starting business, treasury bonds, treasury bills. Very good. What else? Very good. You can buy property. What else? Debentures, gold. Very good. I want more commercial papers. Okay, good. What else? You can move into venture capital and give your money to someone on behalf of equity and profit. Good. We are living in Sri Lanka, and Sri Lanka is famous for. You can invest in that. What is that? Especially if you are living in Ratnapuri, you know that. That's another investment. What is that? Gems. Very good. Very good. Then from time to time, you have seen certain advertisements. Whether you believe it or not, there are these type of advertisements. Okay, if you have excess money, you can invest in teak, sandalwood, yeah, real estate. Okay, right, fine. So you have a whole lot of options. And now I'm asking you a question. What is the best option? Confine into one investment or diversify? I have 60 million and I'll buy entirely gem. I have 60 million, I'll buy entirely gold. What is the best thing? You have so many options, you told me. Fantastic. Diversification or concentration. I will look into only one avenue. Or I'll put 10 million in gems, 10 million in fixed deposits, 10 million in gold, and about 20 million in property. That's diversification. What is the best thing? Concentration or diversification? As per your understanding, what is the best thing? Diversification. Diversification. Okay. Right. Right. Good. So you have good understanding of what to do when you have excess money. Right. Now we'll start to talk. Stocks. We call them another nice word, share. Another nice word, shares. You have heard that word, shares. Okay. What comes to your mind when I say shares? Stocks. So you can be rich by holding shares. Right. Long ago, say 1700, one of the profitable business was ship voyages. You have seen so many movies, so many stories like Sinbad the Sailor. You go to unknown destinations and you find so many pearl, gem, spices, and tusks. You go back to your origin country, Europe, and sell that stuff, and you become rich. Okay. Ship voyaging became extremely profitable business, but risk is very high. So the dictum is higher the risk, higher the rewards. Okay. Now you have two options. You are born in Europe and you are living in 1700 plus. Either you can go for farming wheat or grape and your income is limited, but you live a very stable, good life. Or go for ship voyages. And if you return, if you come back to motherland, you'll be extremely rich, but the chances are less for coming back. Why? If you live as a farmer, chances are very high you will live continuously with a small sustainable income. But if you go on a ship voyage, your income is, your return of is very high, but the chances of coming back is very less. So we call risk is high and rewards are high. Okay, why the chances are less for coming back? Tell me some reasons. If you launch your ship today, the chances of coming back is very less. Why? Yeah. What can be the reasons? There can be ships capsize, tornadoes, lot of climate issues, sea pirates, and when you get into land, there can be unknown animals, cannibals, man-eating men, so many things. So the chances of coming back is less. But if you come back, you will be rich. So you call it higher the risk, higher the rewards. Now, man is very creative. Okay, he's not believing in any of these rules and regulations you put in front of them. The religions put so many rules and regulations, but people breach them and do other things. That's what human beings are. Okay, so human beings, they don't just depend on this nice statement, higher the risk, higher the rewards. They want to reduce the risk and increase the return. Okay, suppose all of you, here you have about 28 members today. All of you, 28 members, have ships, and you want to increase the reward while reducing the risk. Now, all of your ship owners, what can you do? Tell me a method of reducing the risk and increasing the reward. I want you to think and tell me the answer in your chat box. Without taking much time, if it's a physical class, I know how to get the answer, right? I can't see you. Now, you're a ship owner, and there are 28 ship owners here, each on a ship, right? One option, insurance. But I would say in 1700, insurance is not that much popular, and the insurance companies were not insuring ships. The risk is very high. So that option is out. That is there today, but you are living in 1700 and that option is out. Now what can you do? I want others to think as well. There is an answer, very creative one. I won't take much time. Think there was no insurance, but still you want to ensure higher returns while reducing the risk. Okay, the question is, all of you are ship owners, right? And you are living in 1700. If your ship goes to, okay, if your ship goes to a country in Asia and fill it back with pearl, silk, tusks, spices, and come back to your European country, you will be rich. But the chances are there where you will not return. I told you the reason: sea pirates, cannibals, then you don't have good way of predicting the environment, climate changes, tornadoes, storms. So it's very risky business, but still you want to reduce the risk and increase the return. Yeah, using ships for different trades, but still you have only one ship. Okay, still you have only one ship. Now what can you do? There are 29 members known to you. All of them on a ship, but you have only one ship. Okay, right. Without taking your time, I would say share the ownership. What does it mean? I own a ship. You own a ship. So we have 29 members here, all own a ship. So I would say Now I don't physically own my ship. In my ship, I own 1/29th. And your ship, I also own 1/29. 1/29th into 29 means what? Mathematically, I own a ship. So I'm back to square one. But still, theoretically, practically, technically, physically, I don't own any ship. But I own 1/29 of a ship. Okay. So what is happening? Now you have a fleet of ships. There are 29 ships, out of which each ship I own 1/29th share. Got it? So if one ship does not come back, the chances are high. One ship does not come back, but 28 other ships come back. So I get the return. I'm reducing the risk, but I get the return. If that ship which didn't come belong to me, my loss is 100% or more. But here, my loss is just 1 out of 29. Okay, means what? I have reduced the risk and increased my rewards. What is happening? We started to share. Now the problem is, if I'm too old, after sometimes I grow old, I want to transfer my ownership of my ship to my son. Now physically I don't own a ship. I have just a piece of paper called share certificate. Okay. 1/29th of St. Mary's ship belongs to me. 1/29th of Nicholas ship belongs to me. That's all. Likewise, I have 29 share certificates. But physically, I don't own any ship. I want to hand over. If I physically had a ship, I could have easily hand over the ownership to my son. Now what can I do? Transfer the ownership of the share certificate. Suppose I'm in need of quick cash. I need a security. If I owned a physical ship, I could mortgage this ship. Now I can trade share certificate. Now that starts as share trading. Got it? This is an example to show how shares reduce the risk and increase the return. Okay. Share will help me to reduce the risk and increase my return. And physically, I own nothing. But theoretically, I own 1/29th of each ship. This is how the share trading started to take place. And shares became very easy to trade. And a physical place became share market. So you come to this market and started to sell off your share certificate when you need it. Okay, what is meant by shares? A part or a portion of a larger amount which is divided among a number of people or to which a number of people contribute. One of the equal parts into which a company's capital is divided, entitling the holder to a proportion of the profit. Now the ship comes back. Now the ship comes back. How much profit out of the ship I get? 1/29. My ownership is 1/29 and I get 1/29. Okay. Sometimes when I'm in a quick need of cash, I would sell my share certificate to another owner of share certificate. So what is happening? His ownership goes up. 2 divided by 29. So that's how the share market started to act. So this is share, a portion of a large amount which is divided among a number of group of people. Here we have 29 members and each on 129. Later on you can sell and someone else would grab your share and increase his share percentage. So very soon one will have 115, 15 out of 29 shares. So that is happening because of the share trading. What is share market? Very simple, the place where buyers and sellers meet to sell their shares. So you call it stock exchange. It works like an auction. Means what? In auction, I would say I'm ready to sell this at this price, and the buyer would say, I'm ready to buy at this price. Either I have to lower my price and sell, or the buyer has to increase his option and buy from me. And the share market operate on day-to-day basis. So now you should have a CDS account, centralized depository system account, to involve in this auction-like activity. Okay, a nice term, bull and bear market. I think you have seen this term, bull and bear market. And this chart clearly shows how ASI, today we call it ASPI, moves along different challenges from 1993 to year 2006. Okay, what do you mean by bull market and what is meant by bear market? Bull market, so market gives us two directions. You can clearly see here, either market goes up, continuously going up from here to here, or market comes down from here to here, market comes down. Okay, market goes down or market goes up. Only two options. So one is known as bull, one is known as bear. Got it? Which one is bull? Going up or down? Very good. Continuous increase in share prices is called bull market. Very good. And its reverse means what? Continuous downtrend is known as bear market. So this is a bear market and this one is a bull market. Okay, for your easy reference or for or to remember it very easily, I would say like this. Okay, this one. You have seen bulls. How do bulls attack? Okay, bulls attack. Okay, so this is bull. How does the bull attack? First, it lower the head with its horn. What is, yes, so the bull attack with horns. How it attack is, first it pull its head down. What is down is pushed up with its horn. That's how the bull attack. So when the market is going up, it's like a bull attack. What is down is pushed up. How does the bear attack? Contrast to that, when bear wants to attack, it stand up. Then with its front paws, it push down what is up. So you call it bear market. Okay, so keep this in your mental picture. Bull, stand up with its paws. What is up? Possibly pushed down. That's how the bear attack. Bull is reverse. What is down is pushed up. So you can easily remember what is meant by bull and bear. Now this shows a bull and bear market. Now you can see different reasons which made the market bull or bear. Now the first indicator somewhere in, that's May 1994. President Premadas was assassinated by LTTE. Whatever it is, from that day onwards, you can see a quick upward trend in share market. And it continued until this activity takes place. What is this activity? PA elected to office. Madam Chandrika Bandaranaike was elected to president, elected as president of Sri Lanka. And immediately market started to come down. And that trend continued until PA government, Madam Chandrika Bandaranaike Kumartunga's government was dissolved. So almost like 12 good years of your life has spent in rather less activity in stock market. So this is happening. Okay, so you can see during 1994 to year 2004 somewhere, 2002 somewhere, Colombo Stock Exchange was rather a sleeping giant. No activity. It's down, continuously down for 12 years. Okay. If you are an investor, would you blame the government? You can see most of the political activities affect to the stock trading. Okay. If you are an investor, do you blame the government? Say yes or no. 12 good years. Okay, right, I got one answer, you are blaming government. Others, I want some more answers, very quick. Okay, at least 3 answers. You can see. Okay, right, thank you. Right. If you are an investor, you should never ever blame the government. Why? When one investment alternative goes down, it does not mean that other investment options are also sleeping. No. When one indicator falls down, something else would pick up. And at the beginning, you told me you would diversify. Means what? If one falls, you have a lot of other options. You told me that. Then why do you want to blame government for failing in one variable? Right? And if stock market was not at all active, if the stock return is negative, something else must be performing well. What is that? There is an inverse relationship between something else and stock market. Okay. Now market is giving you negative return or very low return like 3%, 2%. If you are an investor, you told me you have so many options, including gems, gold, treasury bills, treasury bonds, so many things. What will you do now? Are you waiting 12 years blaming the government, or would you quickly sell? The moment you see the signals, sell it and invest somewhere. You have options. What are the other options you select if the market is coming down? Okay. What are the other options you have? You can purchase properties. Okay. Right. Think about current situation. What is now you told me, one of you, the very first answer I got for investment is fixed deposits. What is the fixed deposit interest offered by your bank these days? Tell me a percentage quickly. Fixed deposit interest rate per annum. 5%. Okay. When market return is 5%, lot of fixed depositors, sensible fixed depositors, withdraw their money and invest in Colombo Stock Exchange. And I showed you the answer. In 2020, stock market has increased by 10.5%, which is highest since 2014. And the turnover was highest since 2011. Means what? When the interest rate goes down, stock market goes up. If so, its reverse must also happen. What is that? When the stock market comes down and gives you less return, like 5%, 2% negative return, you will definitely withdraw from stock market and invest in fixed deposits. Okay. So we don't blame governments. We just look at the signs. Now, the very sensible portfolio managers, they would look at political census. Definitely, Madam Chandrika Bandaranaike is going to get elected. His economic policy is such. If so, it's not healthy for business, but interest rate will definitely go up. Even treasury bill rate would be about 10%. If so, banks would give 18 or more interest rate. Today, it's better to sell my share portfolio and go to fixed deposits. And out of the fixed deposit interest, I can buy shares which are falling down in value. So one day, when once again a business supportive government comes, I can make a good return. That's how an investor think. Now, year 2002, UNP or Mr. Ranil Wickremesinghe's government came to power for a very short period. Mr. Ranil Wickremesinghe used to be the Prime Minister of Sri Lanka on many occasions, but failed to continue his entire duration. So this was one example. So from 2002 to very short period, he was the Prime Minister, and you can see the market going up or down. Very supportive to business those days. And market was continuously going up until it was sensed SLFB is going to be the ruler again. But initially there was a drop, but then there came a quick recovery because it shows the thinking pattern of next president. Mahinda Rajapaksa was not equal to Madam Bandaranaike. And once again, the business community started to get more active life. So we are looking at politics. I'm not talking politics. I'm just showing, instead of blaming any politician or a regime, as an investor, what would you do? Select the best option. That's why at the beginning I asked, you have only one option. Then you came up with so many options. And I'm now telling you, when one falls down, something else may pick up. A very careful investor will always be the winner by picking what is going to go up. So they don't blame anything, government or COVID-19 or anything, they don't blame. We talked about CSC from here to here. Year 2008, December, that was the lowest within 5 years or more. This is one of, okay, so from here to here, what is the market? Bull or bear? Bull or bear? I'm referring this part. Is it bull or a bear? Bear, very good. That's a bear market. But year 2008, we saw December. That was one worst hit for stock market. Year 2008, December. Can anyone cite me reasons? Earlier I showed you reasons. Okay. Now all these are reasons. What are these reasons? LTT attack Colombo Airport. Bomb blasts, World Trade Center bombed. Okay, truce violation by LTT means what? During Madam Bandaranaike era, we had a peace pact with LTT and Norway supported that. During Ranil Wickremesinghe's era, we had a peace contract between LTT and the government. Okay, so theoretically, if two parties are fighting, if A and B are fighting, there are different alternatives. Either A go and crush down B, and you will have a period called peace, or B will crush down A forever, and you will have a period called peace after that. Or A and B decide, let's not fight today, but we'll fight some other day. And some call it peace, but that is not peace. So these were such occasions. But you can see, whenever a city is bombed, a location is bombed, attacked, or the peace agreement is signed, that affects negatively or positively to the market. Year 2008, Sri Lanka, what was happening? Can anyone tell me the reason why stock market all of a sudden came down? Reasons for this downtrend, for this bear? 2008, December. Market always react. Very good. One is global financial crisis. That was happening in year 2008, subprime mortgage crisis and the aftermath. In Sri Lanka, in addition to that global financial crisis, we were facing the last Elam war, fourth Elam war. And we were terribly attacking each other. And market was such, there were a lot of sellers and less or no buyers. Very good companies like John Keel's, where net assets was about 75 rupees, fell down to 50, 2008 December. Shares like Brown's Group, net assets were about 100 plus, fell below 50. Why? There are a lot of sellers who sense the war will drag on. The financial crisis will eat us, and they want to sell. Rubber manufacturers of Sri Lanka found what? There were factories that were selling rubber gloves only for Toyota. That Japanese Toyota plant was shut down temporarily because there is no demand for cars in the world. Means what? We are facing the impact of global financial crisis. Tourism. No tourists want to visit Sri Lanka. Number one, due to financial crisis, their income was hit. Number two, bombs blast everywhere in Sri Lanka. Who want to visit such country? Okay, so we were facing the worst hit, one of the worst hits in 2008 December. 2009 May, what happened? We ended Elam war and the world ended its financial crisis. Now, what do you see? This is 2011, up to 2011. What do you see? Bull or bear? Bull or bear? Bull. It's a continuous bull market. Colombo Stock Exchange became the world's second best performing stock exchange in the world, 2011. Okay. After that, what happened? Bull or bear? After that, bear. Okay. Now you can see two things. Number one, fundamental reasons. Fundamental reasons means things happen due to a reason. Okay. President assassinated. Whatever it is, this is the result. Market started to go up with the news. Then Another political party came to power, market started to come down. Power crisis. Then World Trade Center Sri Lanka bombed. Southeast financial crisis. Election. LTT attack. Once again, UNP elected to power. All these political things affect to us. Things happen due to reasons, fundamental. Something else also takes place. Remember, nothing can continuously go up forever. Don't think it's go up and hit the sky. Never. What goes up naturally has to what? Come down. So technically, we see things. Okay. Patterns. What goes up must come down. What comes down must go up. So there are technical aspects. At the same time, remember there are political reasons as well. This government all of a sudden came with the bill passed in parliament called expropriation bill. And they acquired certain companies, certain properties, certain estates of private to government again. Okay, so they are not exactly private, but certain properties given for private companies to manage, they were taken back. One very good example in CSC is Palvatta Sugar. Palvatta Sugar was a listed company, but after this expropriation bill passed in parliament in 2012, Palvatta Sugar was acquired by government. Shareholders got nothing. Now, if you have invested 50 million shares in Palvatta Sugar, overnight, you have nothing. Vanished into thin air. Means what? The investors don't like that kind of behavior from a government. Immediately market reacted and it came down. After that, once again, market goes up. Okay. So until 2015, market went up with some seesaw pattern. But after that, market continuously came down. So there was a very good popular belief, whenever UNP is in power, businesses will thrive and market will always go up. This time, it was shown wrong. From 2015 onwards, market continuously came down until another power change took place. Okay. Remember, market is apolitical. Means what? Market is not supporting any political party. The market is indicating where the business confidence is moving. It is not supportive to any individual or political party, but supportive to the business mind, supportive to the collective thinking of business impact. If a bomb will blast and destroy the economy, market will come down. Now that's how a market behaves. If you can predict well ahead of time, you will be the winner. That is the most difficult part. Okay. Now, I want to show you how people behave. This is year 2021. March, I'm comparing two indexes. One is Australian All. The other is All Sri Lanka Price Index. Two market indexes. March 2020. Almost all the share indexes in the world showed this one. Is it bull or bear? Is it bull or bear? Both Colombo Stock Exchange and Australian Stock Exchange, if you take any other Nasdaq, Nike, whatever, Bombay, everyone was coming down in the same pattern. That was the latter part of March. Is it bull or bear? Bear. Right. Tell me the reason for this sudden drop everywhere in the world. All stock markets came down. Tell me the reason. COVID-19. COVID-19. Okay. Now, when you look at the previous patterns, you can see what? Whenever market comes down, what is the next thing? Goes up. Whenever comes down, goes up. Whenever comes down, goes up. Okay. If you understood that, during this period, what you should do? Buy or sell. During this period, year 2020 March, what is the best alternative for you? Buy or sell shares? Okay, good. Very good. Thank you, Diluka. This is exactly what is happening in the market. This is exactly why there are very few Warren Buffetts. I told you the pattern. Whenever market comes down drastically, when everyone wants to sell, like here, when you look at the chat box, everyone wants to sell. That is the best time to buy. Why? Why? Share price is low. Very good. So you have to buy at low and sell at high. But what really happens? Now let's look at how Sri Lankan government behaved and how Australian government and the rest of the world behaved. We Sri Lankans are slightly different than the rest of the world, especially our governments, not the people. Okay? People like everywhere are foolish. Whether you are Australian or the American or the Japanese or the Sri Lankan, majority always behave in a foolish manner. And we called it herd mentality. Buffaloes follow buffaloes. Herd mentality. When others are following, I'm also following them. When others are selling, I'm also selling them. Throughout the world, people behave like buffaloes. And that is the best thing, whichever happens in the market. We find a lot of similar buffaloes. We call it herd mentality. Right? But slight different thing happened in Sri Lanka than the rest of the world. From March end until maybe the first week of May, almost entire country was locked down. Colombo Stock Exchange was non-performing, no activity at all. But rest of the world, they did not close down stock markets because they always give priority to economy than human life. But in Sri Lanka, the government gave priority to human life than the economy. But whatever you do, the result was not much different. In Australia and the rest of the world, market came down in the same pattern like Sri Lanka, reached the lowest, but in Sri Lanka, it did not reach the lowest. And slowly started to come up. But in Sri Lanka, market started almost after 1.5 months, then came a drastic drop. Then it started to go up and join the pattern like the rest of the world. The only difference is we closed down stock trading. Right? Now what happened? What happened was similar to this thing. We ended war, market went up to a very great height. What are we seeing now? Market came down and going up in a very long bull. Okay. Now, if you are a careful investor, what you 2. You buy when everyone is selling. You buy when everyone is selling, and you sell when everyone is buying, and you can be the winner forever. However, I don't blame the good gentleman and the ladies who said it's better to sell at this price. But I'm not saying it's better to sell. I'm saying better to delay buying during this period. The reason is, there's a nice statement. If you catch a falling knife, what will happen? You will bleed. Wait until the knife is really fallen, then pick it. Means what? Wait until the knife is fallen. It's falling, don't catch it. And here, it's really fallen. It has fell down to its maximum. Then pick it. Then you can hold it, then start to sell when it's going up. Okay. So that was the very basic principle of Warren Buffett, value trading. Buy low, sell high. Very simple. But the majority do buy high, sell at low, and blame the government and blame the stock market. This we already said. Okay. When you have excess money, you buy assets. What are these assets? Assets can be of two types. One is called real asset. Means what? These are used to produce firms' products and services. They include tangible, like machinery, factories, vehicles, offices, and sometimes very intangible things like technical knowledge, like trademarks and patents. So these are giving you a return, and we call them real assets. The other side is known as financial assets. Okay, these assets are seen only in accounts. They come in papers. When you say fixed deposit, you don't own anything physical other than a piece of paper. So they are paper assets. Anything which comes in the form of paper, and today in the paperless society as a number, is a financial asset, not a real asset. You don't have anything but a piece of paper or a number. The firms finance its investment in real asset by issuing financial assets in the debt market for investors. So investors, what do they buy? Most of the time, if you don't buy gem, teak, timber, land, properties, then you are buying financial assets. A share of stock is financial asset, which has a value as a claim on the firm's real asset, and the income of those assets will produce. A bank loan is a financial asset. Fixed deposit is financial asset. Right. In economics, there's a nice statement. All financial assets will one day reach its intrinsic value, which is zero. Means what? If you own a physical asset, you own it. Suppose you own a 1 acre land, then you can plant something on it and make a physical, tangible return. But if you own a fixed deposit, what will happen if that finance company or the bank collapse? If you own foreign exchange, currency notes, what will happen if that country is no more in the world? Okay. On such, these pieces of papers become worthless papers. I'll give you some nice examples. Saddam Hussein all of a sudden captured Kuwait, invaded Kuwait. If you want to see the full story, how it affected the people, you can see a nice Hindi movie, Airlift. Okay. In this movie, an Indian person who is living in Kuwait, who is extremely rich, take out Kuwait dinar and bribe to a Iraqi military leader and say, okay, allow my set of Indian people to go to Iraq, and after that, we'll take a plane and go to India. Now the military leader says, if you have US dollars, I'll accept. but Kuwait dinar is no more a valid currency. There were some housemates somehow managed to come to Sri Lanka with dinar in their hand, and no one was ready to exchange that against any other currency. The reason is there was no country called Kuwait for a few days. When the country is no more, the currency is no more. It's just a piece of paper. There is another very nice movie, Goodbye Lenin. When the Berlin Wall was fallen down, there was no country called East Germany. East German is now part of Germany, and the West German was the real control. So they gave a cut-off date to transfer mark, their currency is mark, East German mark into Deutsche mark. And after cut-off date, if you fail to transfer your money, it's just a piece of paper. In this movie, Goodbye Lenin, after the cut-off date, a young guy found millions of money. Go to the bank. He take a huge bag and put it on the bag counter and said, I want Deutsche mark. Then the bank teller says, cut-off date is over. Then this guy asks, okay, what I'm going to do with this piece of paper? It's worthless. Okay, so this is what is happening for piece of papers. Those who had Palwata sugar share certificates would soon find it's just a piece of paper. So this is the risk we are undertaking by investing in financial assets. But as long as we trust them, we can trade them. Okay. Now, so far I have been talking. I hope you understood what I already said. And this is a very interesting area where you can practically involve and get some return. Okay. Remember, education means change of behavior. So I hope you will change your behavior after learning these subjects. Okay. And the way you think must be changed, should be changed. When the greater majority want to sell, you must be ready to buy. I know you don't have much cash now, but your mental picture should be different than others. Now I'll tell you some good examples where it applies to different places. Year 2004, December, what happened to Sri Lanka? We experienced something for the very first time. When we were discussing insurance, I told that. Tsunami hit Sri Lanka, very good. Immediately after tsunami hit Sri Lanka, what happened to the land price of seabed? Went up or down? Went down. Year 2004. Right? Remember, year 2004, President was Madam Chandrika, Prime Minister was Ranil Wickremesinghe. So naturally, two of them were fighting. Whenever you have issue, two of them were fighting. So there was a very good fight. Buffer zone should be 100 meters or 200 meters. Means what? From the point where the sea touched the beach, how many meters should we keep as a buffer zone? Now they were believing, okay, they were the top intellectuals of this country, and they were believing after 2004, each and every month, tsunami will hit Sri Lanka. The media was giving so much publicity to that tsunami. And the people believed seabelt is not the best place to live. It's the place where tsunami will hit each and every month. That is thinking. What happened to land price? Went down. Many people were selling their lands or ready to sell their lands at damn cheap price immediately, and somehow moved to areas like Kasbava, Maharagama, Vissavella, where tsunami will not hit. Okay. If you had money, what should you do? Would you buy land along the seabed at a damn cheap price? Yes or no? Yes. Right. How does the media behave? Right. Media is almost like now. Okay. They were giving unnecessary publicity to tsunami, creating fear psycho in the mind of people. Now you are afraid even to look at the sea. In addition to that, our politicians, they were fighting on buffer zones, 100 meters or 200 meters. And our media, like today, somehow managed to find a person from nowhere and make him a superb hit. All of a sudden, there came a person from nowhere to Swarnavahini and said he can predict the next tsunami, and he predicted the tsunami on January, like our Dhammika Pandya. The media do not look at any qualification, somehow manage to find a crazy person and forward him as a predictor, a solution giver with no scientific background, almost like now. Okay, I'll take you another example. In 1945 or 1944, Japan started to airbomb Colombo Harbor. Immediately, the people who were living in Colombo got so much afraid, and they started to sell their land and moved to places like Avisavella, Mahadagama, believing the Japanese will not airbomb Mahadagama, Piliandala, Casbava, but airbomb Colombo from 1944 to today, each and every day. So the land price in Colombo went down damn cheap. And there was a story about a real businessman in Sri Lanka who was just a cashier of a hotel. And he owned only one thing, a push cycle. The hotel owner with few acres exchanged his property with this push bike and biked or pedaled off to Avisavella. The cashier purchased the hotel plus few acres in exchange of a push bike, taking the risk of Japan airbombing Colombo from 1944 to year 2020 continuously. Who became rich? The bicycle owner or the risky business owner? Right. So these are the stories. But when you are living under the conditions, your thinking is different. You believe COVID will affect our life continuously. Therefore, it's better to sell now and get rid now. My dear, don't blame Sri Lanka. The entire world behaved like that. Okay, the market really behave on two psychological factors: fear and greed. When you are greedy, you want more and more, you buy. When you are fear, you sell now. And as human beings, we always prove that our decision is the best decision. I decided to sell at 90. Look here, the same share is trading today at 30. How lucky I am. My dear, I decided to sell at 30 and it fell down to 10. How lucky I am. So I'm justifying myself. Right. Year 2008, one of you said we hit financial crisis, global financial crisis, very good. Before that, this is the worst hit, 1929. The worst hit in stock market ever, right? The worst situation is this: market didn't recover until 1954. Means what? 24 years from 1930 to 1954. 24 years. Market did not recover. Means what? Suppose you are 20 years old and you have 5 million in your hand. You invested entire 5 million in stock market. At least to take this 5 million back, you have to wait until you are 44 years old. 24 good years you have to wait. a waste of time. So that is the worst stock hit in the world. So you call it great stock market crash of 1929. But after this crash, the government, US government, wanted to ensure that this kind of activities will not take place again. Right. What was happening in US from 1927 onwards was market started to go up continuously, always. Whenever market is going up, what happened? I am giving you a story. I purchased XYZ company at $10, and after 2 weeks, I sold it at $20, and I got 100% return within 1 month. When I say that, when you hear that, what is the activity you want to do? You also want to join that. I also want to make my investment 100% return within 1 month. So what I sold at 20, now we are buying at 20 and selling at 40. And it continued. Now what is happening is the increase become a rapid, drastic increase. Everyone want to buy and sell. So stock market has become the easiest way to become rich. All what you have to do, buy something, wait few days, sell, and you are rich. And everyone want to join that. Very soon, people, even without having that much money to afford, want to join. They take loans and join. Because you can settle the loan, profit is yours. So in a market, you have something called margin trading. Means what? If you have a portfolio of 5 million, a bank or a finance company is ready to give you another 5 million. Only to buy shares. Okay. So if you are having a share portfolio of 5 million, a bank or a finance company would say, I'm also ready to give you another 50%. Okay. 50% by you, 50% by you, and 100 is your portfolio. You have to maintain 50 to 50. This is called margin trading. Okay. I think I asked you to visit some annual reports in Colombo Stock Exchange. When you refer annual reports, please go to the major shareholders list. You will find certain names appear like this: People's Leasing and Finance PLC stroke XYZ Pereira, Pan Asia Bank PLC stroke XYZ Pereira. What does it mean? XYZ Pereira owns these shares, but they are mortgaged to this finance company. Means what? Your share ownership is now mortgaged to the bank. The bank can decide to sell or hold your portfolio. So you call it margin trading. Means what? In order to buy shares, bank is ready to give you money. When the bank is giving you money, you can buy more shares. When you buy more and more shares, the demand goes up and the market goes up. Finally, what has happened in stock market is, due to margin trading, a lot of people were buying shares without having money in their pocket, just by taking loans. And those days, that was not a regulated business. So even without putting your money, you take loans because it's a sure hit. Now the market crashed in October, 10th month, October, 1929. Those days, a nice writer, a journalist who has written nice books like Tom Sawyer, Huckleberry Finn, he came up with this, a very popular statement in stock market. October, this is one of the dangerous months for stocks. Others are, he scrambled the rest of months. Means what? Don't buy stocks. Very dangerous. This is the common man's thinking immediately after a crash. Okay? Don't buy stocks. It's a gamble. Don't buy shares. You are gambling. You will lose your wealth. This is what they were saying. Okay. Now I am asking you a question after seeing all this. Is stock, okay, do you think that buying stocks is a gambling activity? Do you think buying stocks is a gambling activity? Okay, I get mixed reactions. Right. Buying stocks would be a gambling activity if you don't see the fundamentals and buy. But it's a professional activity, a portfolio management done by many finance companies, banks and insurance companies. And there are professional fund managers. It's a professional job. It's not gambling. But if you do it without any understanding, either fundamental or technical, yes, then it may be gambling. But if you study it and if you do it perfectly, it's not gambling. It will definitely give more return than many other investment options. Okay. I hope now you have a fair understanding. Share trading means you are buying and selling shares of listed companies. How do you get listed? A company would get listed by an IPO or by offering shares. IPO means investing for the very first time in a stock exchange. How do you do it? You undergo a process with share underwriting company and you fill a lot of forms and you follow a lot of procedural activities, and finally your name will appear, your company's name will appear in a stock exchange. So that is known as IPO. Initial public offering. Offering shares to the general public for the very first time is IPO. So you are buying shares from the company for the very first time. After that, you buy from an existing investor. In IPO, you are buying from the company. The company wants to expand its capital by selling privately held shares. Now they become shares owned by general public. That is called IPO. Rights issue. Rights issue means existing shareholders given a privilege to buy shares below market price. Okay. Suppose a company, XYZ company, shares are trading at 100 rupees. So you can buy from the market at 100. But if you are an existing shareholder, you are given opportunity by the company. You can buy further shares at 80 rupees, which are traded at market at 100. So you are privileged to buy further shares below a market value. So that is called right issue. So if you are an existing shareholder, you can subscribe or sell your rights. Now, this is one announcement by People's Leasing. We are offering 560 million worth rights with warrants. Warrants attached to rights. Okay. Rights are to be subscribed within a very short period. Warrants you can subscribe after a long period like 1 or 2 years. So People's Leasing Board yesterday resolved to recommend to shareholders a right issue of 1 new ordinary share for every 2 held. Okay. Now, if you have 2 shares of People's Leasing Company, you are given a right to buy 1 share. So if you have 200 shares, you can buy additional 100 shares below market value. That is a privilege given to you because you are the existing shareholder. That is attached with 3 warrants for every 10 rights subscribed. Okay, so if you subscribe the rights, you will be given a warrant where the expiry date will be after 1 year. Okay. Now, what is IPO? What is IPO? IPO, initial public offering, offering shares for the very first time. Very good. What is a right issue? What is a rights issue? What is a rights issue? Issuing shares for existing shareholders at a price below market price. Okay. Do you want any clarification on these? I have given the slides. Refer them. If you still have questions, please ask me next week. Okay. IPO means you're offering shares for the very first time. Let's say People's Leasing Company was a fully owned subsidiary of People's Bank. Means what? The general public is not seeing the annual report, financial statements of People's Leasing Company. It is seen by the mother company and few other stakeholders. Then People's Leasing Company decide we'll go for the IPO. After that, we will be a publicly quoted company. So the People's Bank earlier hold 100% ownership. Now they hold 75%, 25% by general public. So 25% given to general public by way of an IPO. The total value was 8 billion Sri Lankan rupees. That was the second highest IPO after Dialog. And the general public purchased the shares at 18 rupees per share. So that is the IPO. Okay. Bubbles. Now, there is something happening in the market when you look at the pattern. Okay. Now, if you look here, this growth is exponential, too much. I would say it's too much. Okay. All of a sudden, it started to go up unnecessarily high. So you call it a bubble. Let's look at our Colombo Stock Exchange. This one. Year 2011. All of a sudden, very steep upward trend. No two words. This kind of behavior would end up in a quick downturn. That is technical. What goes up must come down. What goes faster should come down fast. Such a situation is not normal. Look here. From here to here, it's going up, but in a very slow, steady journey. So there is no quick come down. There were drawbacks, but picked up. But here, unnecessarily, all of a sudden, going up. No two words, it will come down in the same pattern. So we call it bubbles. Bubbles are like water bubbles in a pond. In the depth, a very small bubble will start to come up. The more it reaches the surface, the bubble will become big and bigger and bigger. And finally, when it reaches the surface, what will happen? A bubble in a pond, very small in size, okay, then started to expand when it goes up. When it reaches the top, it has become a huge bubble. But when it reaches the surface, what will happen? Bubble
will blast.
Bubble burst. Very good. Remember, all bubbles burst. All bubble bursts. Okay, it can be stocks, it can be gold. If the pattern is unnecessarily quick, it will come down. Right. So this is something happened in US. There have a lot of bubbles in the world. This was one infamous bubble. Somewhere in 2000, Forbes ran a nice article, youngest, richest people in the world. In this list, other than one person, almost all the others were IT related, website developers. Right? So you have Jeff Bezos, you may have Bill Gates, right? All these IT guys. And it prompted many other young people to start up websites and get listed in NASDAQ, New York Stock Exchange. Remember, Bill Gates is not worried much about the stock market price, but about his product. Steve Jobs, very much worried about Apple, not on the market price. Market price will be decided by the general public. If you are the batsman, what is your duty? To bat. There may be a boy in the scoreboard who will fix the scoreboard value representing your hits. But the batsman is not going to do the scoreboard boy's job. Right? But here, in the market, they are not interested in batting. They are interested in the scoreboard. They want to fix the scoreboard price. So came a lot of IT-related firms and got listed through IPOs. They were not interested in the business. They just want to increase the share price in the market and sell the shares and get out. There was so many, and everybody wanted to buy IT-related shares. And immediately after getting listed, the business was not really functioning. The share price went up, created bubbles and burst. So this was known as dot-com bubble burst. 2.7 billion was lost on 10 failed dot-com alone. So this is the problem with bubbles. So bubbles follow this stage. First, you go and list it, take off. Share price is slowly going up. First sell off. Bear trap, we call it a nice term, bear trap. Falls down but goes up. Okay. If it's not a bubble, this must be the natural journey, slowly and steadily going up. Instead, all of a sudden, share price started to move up. Then comes the media. Remember, when your literacy ratio goes up, your foolishness also goes up because now you can read. Therefore, the media try to fool you continuously. The moment you have more TV literacy, the moment you believe in TV news, TV news started to sell Dhammika Panio, promote tsunami predictors, so many other people. It's very easy. When you get media attention, then the general public started to behave in a greedy manner. The I06 company, which was trading at 10 rupees 2 months ago, is now trading at 50. And those who held it within 2 weeks got 50% return, 500% return. That's how the media says about it. It creates enthusiasm. General public started to behave very greedily. Now, the growth is drastic. This is real. All of a sudden, you reach a price, there are no buyers after that. Immediately, fear psycho hit comes down. But all of a sudden, when it reaches a certain value, now the newspaper articles again say it is trading below the highest value. Now some fools again join believing it will go back to normal. But it is not happening. Fear psycho affects again and crash below the real value. This is the real value line. Then The careful vultures who never kill an animal wait very patiently and pick the falling knife and go for long term. So that's how a stock market bubble is acting. Okay. So this bubble applies to anything that moves up faster than the natural demand and supply. All of a sudden, there will be a demand for dragon fruit plants in Sri Lanka. All of a sudden, for sandalwoods. All of a sudden, for green chilies, 1 kilo 1,000. All of a sudden, for saffron, 1 kilo 3,000. Okay, bubbles. All bubbles will definitely burst. That applies not only to stock market. Now, after dot-com bubble, a cartoonist came up with this nice picture. The dot-com bubble had burst, but there is no panic. Everyone knew that there will be another new bubble coming along any soon, so you can easily suicide. Okay, so I'm showing you different perspectives. Stock market is a very good place where you can invest and become rich like Warren Buffett, or you can suicide easily by falling into a trap created by media on general public. When one bubble is gone, you can wait for another bubble if you fail to suicide in the first one. But in a later research, they found the same people who fell into one would definitely fall into another. I'll tell you some nice examples if I have time today left. Okay, not only stocks, even crude oil went up, came down. Okay, when this happens, you always get a lot of nice media articles. In year 2007 and 2008, there were nice articles. This time, the demand for petrol will remain forever. Huge number of people have become middle class men in India and China, where the population is very high and they all can afford cars. There's a huge demand for cars, therefore oil price will continuously go up, believing that Sri Lankan government went and hedged against oil barrel. What happened? The crash, all bubbles crashed, even this bubble crashed, and we lost. Okay. So whenever you look at a pattern, you must be able to say, now is going to be a bubble. If it's a bubble, better avoid. The natural path is different. Okay. At the beginning, I told you, we are not here to blame any government. We see the inverse relationship between fixed deposit rate and interest rate. Okay. Only two variables. The most difficult thing in our world is things are not happening based on just one variable. Stock market goes up or comes down not just because of one simple variable, but at a time we can see only one variable. That's our problem. We see COVID, but we don't see some other factors. Now, this is another factor, market interest rate. You can see when the market interest rate is high, stock market is down. When the stock market is up, that means what? Interest rate is down. Now, interest rate is high, stock market reached down. Okay, what is happening now? Interest rate is down, stock market is going up. Okay, so there is inverse relationship between interest rate and ASI index. Okay, so you can easily see some relationship between variables. Some are inversely related. Means what? When one falls down, the other goes up. Okay. Now tell me, if you are an investor, now you see the two options, interest rate and stock investment. What do you recommend? Diversification or concentration? See the graph very carefully. You have 50 million. Are you putting the entire 50 million in stocks or in bank deposits? Or would you diversify? 25 million in stocks, 25 million in this one, or some other way? Tell me different options you have. Okay, good. Any other creative option? Now, if you diversify, you need not to worry about anything. When one goes up, the other comes down. So naturally, you never reach minus or the ideal high, but you will remain in a medium level like this. But if you follow a very good concentration, I put all my investments in fixed deposits. And when I sense the interest rate is going to go down, I somehow get the interest. So I'm not going for annual, I'll go for 3-month interest and put into cash position. Wait until I see the market picks up. Okay, here I am in cash. Now, here I'm in fixed deposits, 3 months. Now I'm in cash position out. Then I miss this opportunity the lowest. But here, when the market start to pick, I enter to stock market entirely. And I'm remaining here. Then I sell off because I sense the interest rate is going to go up. Wait in cash position and go for fixed deposits again. And when I sense the rate is going down, I go for cash. Then I wait here, buy shares. Means what? You have a lot of options as a fund manager. Okay, you can be average return, negative return, or super class return based on how fast you can take actions. Now, who is the regulator of stock trading? SEC, Securities and Exchange Commission. So the act was passed in Parliament in 1987. They issue license for stock exchange, stock brokers, dealers, unit trust, margin traders, credit rating agencies, investment managers, and security clearing houses. The objectives. Okay. Now you can see share trading is a place where a lot of activities takes place. Some are very good, ethical, some are very bad. So the duty or objective is to protect the investor. Okay, and things happening in a very fairly manner. Compensation fund. Okay, if your broker makes certain mistakes, you need not to be the loser, right? Not for your own faults, but for some mistakes done by your stock dealer, still you will get a compensation. Regulating and maintaining the professional standards. Advising the government. Okay, so if you are the tiger, you must have teeth. You can give the license and cancel the license. Give the compensation to any investor who suffers financial loss. Suspend or cancel the license you have given. Inquire into malpractices. Advise government. Regular inspection of stockbrokers, unit trusts, how they do their activities. To require licensed stockbrokers and to dealers to file with commission to annual balance sheets and income statements. Means what? When you publish your annual statements and financial statements, if there is unnecessarily very high profit, why? Okay, so you can look into that. Any malpractices, you can look into that. Now we come to a very interesting area. How do you analyze a stock? How do you know that this is the right price to enter? If you know that, how do you know this is the right price to sell? If you know that, then you can easily become rich and will not fall into prey of different vultures who are waiting your death to eat you. Stock market is a place where a lot of players are waiting, lot of media are promoting different people and different companies from time to time. You should know when to buy and when to sell. For that, you have to analyze. Analysis can be of two types: fundamental, based on reasoning, based on published accounts, by reading financial statements. Okay. Now, fundamental analysis take place on these macroeconomic. What is happening in Sri Lanka? What is our credit rating as a country? How about our debt serving? Then industrial analysis. Okay. How about tourism? How about tea plantation? How about bank and finance situation? COVID. What is happening? Financial analysis. Okay. I get the balance sheet and income statement and cash flow and the ratios and I analyze them. So all these are fundamental based on facts and figures I'm analyzing. So I'm looking into these things: net profit, profit margin, net income, PE ratio, price earning ratio, price to book value, net assets value, dividend per share. Lot of ratios I look into. So I'm like accountant. I read annual reports and I do my calculation and decide whether this is the right price to buy. At the beginning, you talk about Warren Buffett. Okay. I'll give a very simple question. Okay. Suppose you have a newspaper page, a big one, a huge paper. And I'm asking you to fold it into two. Okay. You have a huge paper. You have to fold it into two. Can you do that? Yes or no? You have a piece of paper, a big paper. I'm asking you to fold it into two. Can you do that? Say yes or no. Yes, very simple. Right. Can you fold it again? Say yes or no. Yes. Okay. Right. Do you think if you have a very big paper like 2-acre, 5-acre newspaper, right, can you fold it 250 times? Paper size is huge. Can you fold it? No. Why? 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 You have a piece of paper like this. You can divide into two. Yes, you can do it. You can divide it into again. You divide it to again. You divide it to again. Right? Now what has happened? There is a width. If you happen to divide it again and again, each and every time, it will double. The length will double. If you do it 250 odd times or more, the width will be like from here to moon. So big, so huge, right? That is the power of compounding. Power of compound. So you can say power of compound interest. Warren Buffett was not a billionaire until 56 years old. He started investing at the age of 15 and he says, I was too old to start investing at the age of 15. Means what? He says he should have started it very much earlier. So he had only 6,000, let's say 6,000 rupees at the age of 15. He invested in that. By the age of 19, he had 10,000 invested. By the age of 30, he has invested 1 million. Right? Then the investment grows. But until 56 years old, he was not a billionaire. Now what is happening? Each and every year, his investment grows exponentially. Okay, so he's one of very good fundamental investor. He has invested in Coca-Cola and has not sold it so far. Right? So most of us believe the beauty of investing is buying low and selling high. Warren Buffett prefers never sell. If you buy a very good company, then hold it forever. Never sell. Okay? So his thinking is different, but he's one of very good value investor. We talked about fundamental investing. He is the best example for fundamental investing, but that is not the only investing. Okay, quotable quotes. The stock market is advice for transferring money from the impatient to the patient. Patient waits until 56 years old. He was not a billionaire, but after that he became world richest man many times. Very patient. Now comes another way of analyzing shares, technical. So you can go through the slides and see the differences. Technical are short-term, investment is for long-term likewise. Trading is different from investing. Traders pick now, sell next. Okay. Use price movements and patterns on charts to predict future price movements. They don't read annual reports, but they look at price movement, how the price goes up and comes down. They analyze charts, not the economic reports, okay, these things, industrial statistics, no. So they don't wait, they pick a share that can move up and sell. Okay. Now this is technical analysis. You do not know what is this country, the share is traded, what is the Fitch rating given, or the Standard and Poor rating given to that country, what is the industry. No, you are not worried about that. You are not worried about the financial statements of the company. You are only looking at patterns. Okay. Now, this is the highest. So I must sell when it reach high. When it reach low, now this is the low line. When it reach this low, I buy. Then I sell. Exit, re-enter, exit, re-enter, exit, re-enter. That is what technical traders are doing. Not holding forever. You buy, sell, buy again, sell again. You are a trader. Then there are a lot of instruments for technical trading. Only chart reading. For that, you have these things like candlesticks. Okay. Now, Fibonacci pattern, yeah, still I have some time to talk. I'll give you this sum. Tell me the answer. This shows whether you can read patterns or not. Okay. Some of us are naturally very good pattern readers. The question is, there is a pair of rabbits. After 1 month, they reach maturity, and then only they can give birth to another pair. That pair will wait for 1 month, get maturity, and give birth for another pair. Okay. Now, next month, this month, how many pairs of rabbits will be here? That is the question. Okay. You got it? There is a picture showing a pair of rabbits. One pair has to wait 1 month, then it will give birth to a pair of rabbits. That pair will wait for 1 month and start to give birth to another pair, and it will continue. Suppose, okay, so I'm asking, just look at this picture. Next month, how many numbers of pairs will be here? Okay. I'll give you 3 minutes. Look at the chart, and in the chat box, you can put a number. First month, 1 pair. Second month, 1 pair. Third month, you have 2 pairs. Then comes fourth month, 3 pairs. Fifth month, 5 pairs. Now my question is, in the 6th month, how many pairs of rabbits will be here? How many couples of rabbits will be here in the 6th month? I'll give you 30 more seconds. Try to put up a number in the chat box. By looking at this chart, you may observe a pattern. Yes. Very good. Very good. That's 8. Means what? It's a very simple chart. How did you arrive at 8? The pattern is previous 2 months, sum is the next month. 1, 1 is 2. Next month, 1, 2 is 3. Next month, 2, 3 is 5. If so, the next month will be 3, 5 is 8. What is the next month? 8, 5 is 13. And the pattern continues. Very simple pattern. This question was given to Fibonacci. Who is Fibonacci and what happened? We may talk if we have time in some other session. Okay. Fibonacci, after completing this sum, did a chart like this. Okay, 1, 1, 1, 2, right? Let's say you have 2 inches. Now you have 3 inches plus 5. This one plus 8. Now we have 8 and 5 to one side. So you get a square of 13 inch. Now you have 8 to one side and 13 to another side. So you get 21 inch square. And it continued. And he took all the midpoints and connected it. And he saw the pattern. You have seen this pattern in many places. Think about elephant trunk, seashell. Okay. But these are predictable patterns. Today, you predict about cyclones. Cyclones Buravi will hit this area. Right? Katrina cyclone will hit only these areas. These areas will not be hit. They predict it very clearly based on Fibonacci. The same Fibonacci is used as a technical analysis in stock market. I'll talk about that whenever time allows me. Remember, you are not looking into numbers and doing so many calculations. You look at a pattern and predict. Okay, this is how these areas will be vulnerable, not other area. So that's how you look at patterns. Warren Buffett is the best example for value investing, fundamental analysis, and Jesse Livermore is known as world's greatest stock trader, technical readers. So these are some of their quotes. I showed you one quote of Warren Buffett. Successful trading is always an emotional battling for the speculator, not an intelligent battle. Okay, you don't want to be a good accountant, but emotional. He knew that his biggest enemy was his own emotions. What are our emotions? Fear and greed. How do you play with that? You must know that. First, do not be invested in the market at all time. Warren Buffett invests continuously. But if you're a trader, there are many times where I have been complete in cash. I showed you some example. I sell all the shares and completely in cash, waiting for fixed deposit to go up. Then I move the other way, completely in cash. That's a trading. So you can be in trading or in investment. Who is a stockbroker who buys and sells securities on behalf of a retail and institutional clients. Okay. Share underwriting. When you are listing a share for the very first time in IPO, you need advice. You need someone to support for filling documents. For that, share underwriters come to help you. At the same time, they do underwriting. Means what? Whatever the number of shares not subscribed by the general public, they will buy. So that is underwriter's business. Portfolio management. We said you can go for investments, stocks, You can go for fixed deposit, gems, jewelries, properties. You came up with so many things. So portfolio management means managing such investment portfolio and structuring them, looking at the market situation, economic situation, political situation. So you do immense research, thorough research on financial analysis and do that. Okay, so these are about portfolio managers. Now I come to the ending Norwegian Petroleum Fund. One superb example for investing. Norway, the country, found oil and they were interested in investing oil income. They knew one thing, oil income is not a guaranteed income forever. There was a country called Dutch where they found oil and they did not manage it well, and oil and the gas vanished from their so-called wells and they faced a so challenging times. If so, we must avoid repeating that. That was known as Dutch disease in economics. In order to avoid that, they decided to invest their excess cash made out of petrol in businesses other than petrol. So initially, they invested only in debt securities or fixed deposits. Initially, only in treasury bills and bonds issued by very strong economies, say USA. But they very soon found their return is very low compared to other sovereign wealth funds like Qatar. Therefore, they decided to invest in shares. It is biggest holdings Apple, Nestle, okay. So by now, they own more than 3% of the entire stocks listed in the world. If you go to their website, this value will always be changing on a working day. How many kronas? 10 trillion krona invest, Norwegian krona. Okay. And I recommend you to visit their website. You can go for Norwegian Petroleum Fund. When you search that, you will get the fund. Then look into their website. They have a map. You can click on Sri Lanka. Then you can see how many Sri Lankan companies they have invested. Okay. Right. Now we have come to the end of this session. We talked about shares. Shares is ownership. We call it equity. It means what? Ownership. Owners, what do you get? If you own a business, what do you get? Now you know that like a ship, you don't own the entire thing, but a percentage. 1 out of 1,000, 1 out of 29, 1 out of 30. That's how you get. Okay. When you are the owner, what do you get? When you own a business, what do you get? What is your return? Yes, in real profit is what we show in the accounts. When we take it out, we are not taking out the entire profit. We have to keep a considerable amount in the business to do business again. A little bit we take out, maybe 90%, maybe 10% we take out. The moment we take it out, we call it what? Dividend. Okay. So if you are the shareholder, if you are the owner, you get profit, and what you get into your hand is dividend. Do you think your company will always be in profit? Do you think that your company will always be in profit? No, no. If your company is not in profit, you will not get dividend. And remember, even if your company is in profit, there is no compulsory rule to declare dividends. Right. Contrast to that, we have another option called debt. What is debt? A loan. Whenever you get a loan, Suppose you are giving a loan. Now you have excess money. Instead of investing, you give a loan. When you give a loan, what do you get? When you give a loan, what do you get? Interest. Very good. Now you give a loan to a business. The business is not making profit due to COVID-19. Okay, you are the individual person. You gave money on lend to one of your friends' business. Due to COVID-19, the company is not making profit this year. But still, should he pay interest? Yes or no? Should he pay interest to you? Yes, you must pay interest. Yeah, if you are so good-hearted, you can give a grace period. But theoretically, if you take a loan, you have to pay the interest, irrespective of you make profit or not. Remember, no company or no individual will give you a loan and say, if you make profit only, then please pay me your interest. No. Whether you make profit or not, pay me interest. Okay. So when you give money to a bank, you want interest. You are not having any condition. Okay, if the bank faces moratoriums due to COVID-19 and if the loan takers delay paying, I'm ready to sacrifice my interest. No, that's not. Pay interest means what? Debt instruments pay you interest irrespective of profit or loss. But if you buy stocks, you will get dividend and ownership. Okay, right. So please go through the set of slides. What is the duty of Stock Exchange Commission, SEC, right? Who is the regulator, objectives, then practically get some understanding by looking at CSC website. Please refer Norwegian Petroleum Fund and look at what are the areas they have invested. For exam purpose, there will be questions on SEC related area. Okay, what are the institutions governed by SEC? Okay, and some exam related areas I'll touch later. Today I gave you a generally good understanding about stock trading. Okay. And I gave you enough examples to show how the markets fluctuate. They go up and they come down. Your duty is to protect your wealth. Then there are portfolio managers who protect your wealth on your behalf. Okay, with that, I end today's session. Okay, we'll meet next week with another heading. Thank you.